All right, Doc here from North America. It's Happy to Hump Day. So, good morning, good afternoon, and good evening. And as unfortunately, as usual, the dollar is strong again. It just keeps on. Why are they running to us? I guess Italy and Sweden and England are telling you why. The people are finally had it. They're trying to find governments that actually care about growth and better forms of life, not putting everybody to sleep for the next 30 or 40 years or 50 years or whatever it is they think they're. Whoa, where'd that volume come from? There we go. And and that's really what it comes down to. There's Janos. So Bank of England has chickened out. No, it sounds like they're buying bonds, supposedly protecting pension fund which have experienced margin calls. Well, they should have raised rates 3/4 of a point, right? And they didn't, so they're doing the opposite side of it. They're buying bonds, and I hear you. That I would be happier if they'd have gone to 3/4 instead of a 0.5 percentage point. The chickening out, as far as I'm concerned, is not raising it to 3/4. Hell, they should have raised it to 1. But strange that a pension fund uses margin trading. Yeah, I know. I agree. Hey, Metho. Yes. Let's go back to Giannis's statement, because that's a really true statement that you just shake your head at. It's like, what? Pension funds using margin? That's because they're burning up the money to support the liberal cause. We have it here in the States. They've put out literally the pensions funds and the union funds spend on average in the United States 200 is it million? $200 million a year giving to the left politicians. They've tried, this is what they're doing, Giannis. What they're trying to do is they're trying to force the governments to take responsibility for the pensions. That's what it is. So in other words, people working, union people working, without being a union, they plow money into their pension funds. And then what they want to do is the pensions have been giving money to the left in government across the planet to get them to pass legislation to take over the pension funds. They're very close here all the time. They're fighting for that constantly, but the country's not supportive of it. And so I don't know how it all plays out in Europe, but I would have to believe that they're more supportive of that type of socialist thing. So that's what they're doing. That's why they're doing it. M-A-R-U, Maura, how you doing? Good morning, good afternoon, good evening. So that's exactly what's going on. Strange that a pension fund uses margin trading. It's because they're burning up their money to get the politicians to take over the responsibility of the pension funds. Here's something you haven't heard, probably heard in the United States. All the union pension funds have had to cut their monthly payouts by between 30 and 60% over the last 10 years. So, in other words, they've burned so much pension money up. When you're giving out $200 million, a year for decade after decade, it's billions. They've given billions away, and they invest with only pension managers that will invest kind of like in friendly things towards like you heard. Do you remember Solyndra and all those other solar collector companies during the Obama years where they lent them billions? The government did, and the pension funds invested billions into them, and then they went bankrupt. So that is your answer to that. Strange that a pension fund uses margin trading. Yeah, it is. But when we don't have medias, like they call people like the new prime minister to be in Italy, a fascist. because she believes in less taxes and the law. That's considered a fascist. Oh, and she believes that her country should protect its borders and protect its citizens. That makes her a fascist. Same thing with the new Prime Minister of England. She wants to lower the top rate from 45 to 40, and she wants to start drilling for oil and natural gas again. She is now considered a fascist. And when you have media that will keep on saying these things, it just confuses everybody in general. That's all. Not so much into U.S. subsides, but ouch. Yeah, I hear you. And I see it as a change. Sweden is showing us the same thing. They're basically the people who believe, which is considered the right, not National Socialism. National Socialism was not the right. I don't know why anybody would think someone who believes in free markets and free people that they would name their political party National Socialism. I have no idea why anybody would believe that, but they do. And so, and the end result is that's why, answering Giannis's last question, strange that a pension fund uses margin trading. That's because they're burning the pension money up for socialism. They keep on burning it up, and their funds are dropping and dropping and dropping, and the membership or the owners or the investors don't realize what's going on, because the media keeps on telling them, oh, be happy, smile, this is okay, and that's what the problem is. All right, let's get to the markets more. That is part of the markets. I know some people here and around the country and around the world go, I don't want to hear about politics in investing. It's like, politics is investing. Who do you think create the laws? Who do you think write the legislation? Who do you think invent the protectors, like the Securities Exchange Commission? It's politicians that do that. So if you don't want to hear about politics, then you don't want to hear about finance, because they're the ones creating the rules. And so all we're doing here is talking about the rules and who write the rules. But more than that is we show you here real markets for free people and free trading. That's what we do here. All right. Dollar index again, as I said, we're sad that, let's put it up on Chicago Quant too. We are sad that it just keeps on finding ways to go up. It's like watching the dollar Turkish Lira chart. 28 weeks of weekly buys. It's like money is just running away from those things. And obviously, people are running towards the dollar because it's the best investment. Remember, Doc here has a saying. I know it sounds crazy, but in America, we really do, with free markets and free people, we really believe this. Buy low, sell high. Now in Europe, the main theme of the European Union has been for 12 years, buy low, sell lower. Now, a lot of you there might, hearing this are probably going, this guy's out of his mind. I'm turning him off. Well, that's quite all right. You're welcome to turn me off, but just know one thing, you're running away from the facts. It's been state-sponsored financial terrorism. You buy a government bond, normally you get some type of reward for buying a government bond, like interest. But not in Europe. In Europe, for last decade, it's just starting now. They have no choice, as Jano said in his second statement. Or was it the first statement? So Bank of England has chickened out. Okay? What they've been doing is they've been forcing people, when you buy a government bond, that you have to pay the government interest too. So you go out, you buy your bond, and pay the government interest to own the bond. That's why Doc says here, buy low, sell lower is the policy of Europe. What about euro, dollar short and midterm? Yeah, it's going to be very interesting. Let's put the euro up there. No, that's the wrong place. Let's go to there. There we are. There's no, that's not it either. What I do? I put up commodities. Let's close that for a second and let's open up. There we go. Right there, Dukascopy day week chart. Here we go. Now here the euro. Last I saw it was, yesterday it looked like it was fighting its way back a little bit. We were playing with the daily buy. We were seeing some life in it, a whole bit, and then out of nowhere, again. And you can see it here. Yeah, you can see that high yesterday. No, that's the NAS, the Kiwi. There's the euro. Yeah, you can see that high yesterday. There was the high. It was trying to get into a daily buy, and look at it. It's just smashed back down again. Now, today it's kind of flattish here and down just a little, and you can see it's trying to lift up. Maru says, I have followed a stream of yours a long time ago. Just got back to trading with Duke again, and after a long hiatus, I got an alert. Lovely hearing your voice again. Oh, you're so kind. Thank you very much. Doc is still crazy, Doc. Here I am. It's shocking to see their decline in the euro. At least gas prices are okayish. Yeah, I agree with you. Well, look. Right now, the policy of fossil fuels. There's literally a political religion out there that believes that fossil fuels are destroying the whole solar system. So, like Pluto lost a third of its atmosphere over the last 6 years. There are now global, 4 ice ages, 3 solid ice ages on, Neptune, Jupiter, and Saturn. They've gone into ice age out of nowhere. Mars is experiencing earthquakes, which was not supposed to ever happen. And then Earth we've lost a third of our magnetic field, and they all think it's got something to do with the oil we dig out of the ground and the cars we drive around. I had no idea that SUVs had that much power to influence the whole solar system. So, this particular political movement is kind of like, some type of star chamber thing, where they really see mankind having a whole influence on our whole solar system. So they're stopping us from, I don't know, they keep on playing with Newton's laws, the renewable energy. You can't create or destroy energy, so it can't be renewable. But, they're doing it. But anyway, that's what's going on with the gas and energy sector. It's being influenced dramatically, and so it's holding up pretty well, pretty firm there. It's the SUVs out of Detroit, Michigan in the United States are destroying the whole solar system. It's really weird. Did it worrying that I'm zero surprised this is the case? Yeah, really. As I said, Europe has this tendency, and our American left has this tendency to believe that you buy low and sell lower. But thank goodness in America, the rest of the country is still supportive of the idea that you buy low and you sell high. I don't mind selling short high and then trying to buy back cheaper. That's fine. But not buy low and sell low. That's definitely not it. So there's the euro. You can see here. And let's put it up on J4X. Let's see what's J4X. Oh, here's something for you, Maru. We've kind of developed a kind of tool system for the J4X. We call it the Manhattan project, or Manhattan indicators, because what it is, it's taken from the physicist from the Manhattan Project, and one of them told me that they were doing this, and you can see Jimmy Simons, the Renaissance Technologies, the number one hedge fund on the planet. It's funny how Warren Buffett gets all the credit as being like this, what do they call him, the something of Omaha, and the Oracle of Omaha. That's it, and so. He seems to get all this credit, but the greatest return in investing is the Renaissance Technologies, the Magellan. And, they get like 30% a year, 40% a year, 25% a year, and no one talks about them. I don't know why they like to hide. I know why. No, I do know. I don't know why I started to say I don't know why. I know why they hide them. They hide them because they use something that everybody gets scared about. They use binaries and they use options, and because of that, they don't want to talk about the Renaissance Fund, the number one fund on the planet. And so when we go and look at these tools we have over here on J4X, I'm going to make it bigger for you. Here's, since you're just coming back, what we're using is Hinky ASCII bars, and what they do is they kind of emulate my dots. Let's see if we can do this. They emulate the dots that I use on the bars themselves. Okay, so they're about a 68% correlation, which is pretty good, compared to using like a MACD that's something like a 35% correlation on my math. And then what we're doing is down below, you see the green line and the yellow or the orange, it's a yellow dashed line. And what that is that's two moving stochastics against each other. The green line is a fast moving stochastic, and it's the fast D. The dashed line is a slow moving stochastic, and also a slow dash, D. So what it is it's basically two different stochastics battling with each other. You're not looking at one stochastic here. You're seeing two different mathematical stochastics. And so combine those together, we get about a 68% correlation in our math with with Doc's Chicago Quant Technologies. Let's see. Like stable year in and out. Yeah. Okay. Yeah, I hear you. And with what's his name? With Buffett. Oh, Giannis says, if one reads Buffett's biography and knows finance, it ain't that much of a miracle. Exactly. He's an insurer. He invests mainly. He invests in everything. All kinds of sectors. But his main investment is insurance, and insurance companies in the United States get a lower taxation. So his success is like being invested in the S&P 500 blindly and getting a lower tax rate. That's pretty much his success, which I don't discredit him for. It's okay. Making money, I believe in making money. That's what I'm all about. In other words, I'm sipping my tea here, but I'm believing in, buy low, sell high. I would say using his dad's connections. That too, his dad was a congressman. Right, exactly. And matter of fact, I think he actually met Graham or Dobbs. His dad introduced him before they committed suicide or whatever. Investing someone else's money and taking a big part of the profits. Exactly, the 20%. Exactly. Yeah, it's all part of the game. That's the politically connected. Exactly. Yeah, Giannis, you're totally right. 100% there. Really, that's what it all comes down to. So anyway, that's the Manhattan indicator we put on J4X right there. And so it has a decent correlation to our math. Like I said, it has about a 68 to 70% at times. It's a little lag in time also at the same time. But that's okay. It's better than nothing. So you tune into the the Dukascopy webinar, and you got Doc's math for an hour, and you have opportunity to ask questions. And at the same time, we show you how to use J4X in a different way. And, it correlates a little bit, pretty decently with our math. Like I said, about 68% of the time, which is not bad compared to some of the other stuff, like a plain stochastic, bad. A MACD, bad. Moving average, bad. Their percentage of success compared to my math is way, way low. So that's it. Yeah, that's cool. And it's a good tool. It is. It works well. And that's why we keep both charts up there. This way, the average person just coming in can put these things together, and then we show you how it looks on Chicago Quant the same way, and you can see the correlation. Like this is the daily right here for the dollar index. Let's put the euro up there. There's the euro right there. And you can see all the red right here on Chicago Quant. And what do you see here? You see all the red. And then you can see the stochastic is trying to bottom and give it a buy. You see ours. Let's see if we can do this. what do I do here? So if I move that up a little bit, will it help it? I guess what I do is I crush it down a little bit. So if we go like, where's it at? Right there. You can see our green line has turned up. It's turning up aggressively. You can see here the green line is trying to turn up also. It's moving a little bit slower, but it's better than nothing, not having anything at all to follow. In other words, the J4X tools here are blessed, or let's put it this way, I give my respect for them to work decent. And better than anything else out there in the public arena as far as I'm concerned. And so, I'm saying, you can trust these tools to keep you in a safe trade. Let's put it that way. And then, over here on Chicago Quant, you can see how it looks the same. You can see how it topped out here. We topped out, you can see it there. We topped out. And then it went down, went into a buy for a few days of strength, and then topped out again. And it did the same thing as let's see if we do it like this. There we go. See the same gig, the same type of situation. The bounce and another slide. Ours is just a little bit more sensitive because again, I compete with Renaissance, so we don't give away our mathematics. We've given lots of insight to it, but we don't give away our mathematics because we're battling with Renaissance as a competitor. So and the media is not going to follow people like us anyway. They don't want to talk about Renaissance. They don't want to talk about Chicago Quant Technologies. They're not interested because they don't want to get involved in the derivative universe. They don't want to talk about. I mean, I had a hedge fund. I had a 26% gain year. I got bored with it and shut it down. I thought that was too small. 26% return is too small in my head. So that's the way it goes. That's our world. Us derivative binary option guys. 26%. I light a cigar with that much money, so forget it. All right, let's go to the cable. Let's see what they did to the cable this morning with the Bank of England jumping in. And I agree with you, Janos. I would have rather seen a 0.75% increase than them going out and buying bonds. But I think they're just trying to stabilize their market to start off with, and then don't be surprised if they do like a 1% in the next round there in November with the Federal Reserve. Try to start catching up, and that will put respect into the British market even more. But their Prime Minister is doing it now. You can see that there. It's bottomed out a couple days ago, and it's trying to build a base in there, and you can see our line coming through. Would love to see the weekly start to show some life there, but you can see it here. You got all this red going on, just like we have all that red going on, and you can see the little green here, and we had our green there, that type of thing. And we've been in a daily sell since here, and it's our lines are still minus. It tried to bounce a little bit in here, but without a green, there's no way you trust it. And right now you can't trust it because there's no green here. So, and that's the action we're seeing on this. This is Hinky ASCII bars are a two-time moving average of the 4 points in space, the open, high, low, and close. And so that makes it a moving average overall. It's an extreme moving average. So it's like kind of using a moving average on a candlestick. And you're actually using the candlestick moving average itself. And that's what's going on with a Hinky ASCII bar, which is nice. Now, we don't do that with our Chicago Quant, with those red dots and little green dots, but it's something like that. And so, it's a combination and our formula at the same time. And then obviously, the daily chart, same way. That's what's generating these lines. It's it's different forms. And then the manifolds, those golden manifolds here, they are a standard deviation of our mathematical formula. So they are at the same time, they are an emulation of what the Bollinger Band. I think we used to have a chart. They used to have a Bollinger Band on it, and it shows the actual action itself. So that's what we're really looking at here when we're looking at all these indicators. All right, from there, let's jump over to the, was it the Swiss? Yeah, let's do the Swiss. And there's the Swiss. And, let's see, let me just do this. There we go. And so then the Swiss, and let's put it up over here at the same time. The Swiss, you can see still green here, but it's trying to curve. Over on Chicago Quant doing the same thing. You can see we are starting to head south. We're heading towards the sell. We're on the edge of it. The weekly has turned there. And banks and institutions themselves have little influence. Yeah, they're basically run now by the Federal Reserve. The Federal Reserve, independent banking is kind of dead at this point. In other words, they have to follow a recipe. So in other words, there used to be in the old days, you knew your banker, you walked in, you said, I want to open up a little supermarket. And the guy says, okay, what do you got to back it up with? I'll lend you some money. And he says, oh, let's see, I bought this property years ago and it's just sitting there. Okay, good, I'll lend you money on the property and then you can build your supermarket. Nowadays, the Federal Reserve has a formula. So you go into a bank and say the same thing. I own some little property here. I'd like to borrow money against it. And they have a ratio now. And they say, okay, yeah, well, right now properties are going for, let's say it's $500,000. But it's going to cost you $20 million to build the, or let's say it's going to cost you $5 million to build the supermarket and fill it up with food. And we can't give it to you. Oh, why not? Well, because that's $4.5 million less than what the asset's worth. You can build a supermarket for $500,000, but you can't put like a $2 million or $3 million or $4 million supermarket on there because your property is not worth it. And that's the whole difference there. And that's how banks function now. They don't. They're not willing to. They're not willing. They're not allowed to. They're just not allowed to do any of that. So, and that is what's going on there. So, what you get is you get this situation where banks are cookie cuttered, where you can't do anything but that. So that's where we're at nowadays. All right. From there, let's drift over to, we make a joke about it, but let's just drift over to, let's see. Let's move this over like so. And let's drift over to the Turkish Lira right there. And as you can see there, the Turkish Lira is trying to make a bounce up. There is some pressure on it. And what else can we say about that? Let me do this. Let me close. Yeah, okay. And so you've got that going on. And you can see it over here on J4X. Right there. Euro Turkish Lira. And so you can see it's been moving down. We're starting to turn. You can see here on J4X, the green line is trying to turn at the same time. And that pressure, the pressure is on. It's trying to get going, and we're, they're trying to come up with ways to, I guess you could say, get everything moving along in the right direction. But right now, it's not happening. It just isn't happening. And we've seen what the others look like. Let me just stop this for a second, like so. And close that. And then get rid of that. There we go. And so that is really the true story of it all. When we look at, see what they're doing with the, where's that? There's the dollar Turkish Lira. You see they spiked it to 19. Ouch. Let's see what they have over on J4X. I guess there was a panic somewhere, huh? Yeah, they got some type of spike going on. So you can move this down and see it. Yeah. So that spike is over there on J4X too at the same time. So we can move it away from the math. Let's just make it bigger. Something like that. There we go, yeah. And when we go like that, what is that? That's 1868. Remember, this is an average. So that spike is obviously someone panicked, did something. And so that's really where we're at now is, that situation right there. Trying to think what else we can say about that. Let's see. From there, let's go to the Canadian. And you see the Canadian. The Canadian is trying to move down a little bit. You can see the work is breaking down here. And then what we do over here is we go look at the dollar. The Canadian dollar against oil. So we'll put oil over on J4X. Because they're kind of analogous to each other. Right there. You can see oil is trying to bounce up. It's kind of like inside range thing. And when we reverse that, excuse me, when we reverse that and we put oil up there, you see oil is threatening. It's going into a buy. So it's kind of lifting up. Now the high is 80.16. And I'm not sure why the charts don't want to reflect that. But it says it right there, but the lines don't reflect it. I don't know why they do that. But in the end result is that you can see our math is turned up and it's trying to get going in there like that. The weekly's still in the sell side of things. Oh, here we go. What was it? Let's see, banks. Prime reason for me to not even peek at exotics. Absolutely massive spikes. Yeah, exactly. It's flirting with the daily. Oh, what's that? The oil? Yeah. See that? It is. It's playing with the daily. It's showing some life in it. And then over on J4X, you can see. Let's see. I think we were shrinking this down too much. Let's move this up like that. You can see over on J4X, it's doing the same thing. It's trying to turn. And once this turns green, then it turns it into the buy. Whereas over here we're already through the daily. We'll see how it closes. And this could change, between the close of the day or tomorrow. J4X will catch up. Depends on the action. And then from there we slide over to South African Rand. Oh no, we'll go to gold. So we put gold up. Let's put gold up on Chicago Quant. You can see gold is trying to lift here. Is it possible for your math to stop working one day? I back tested it 37 million years. It worked pretty good back 37 million years ago. I used an expanding galaxy. Matter of fact, I used Lisa Randall's mathematics. She's the head of physics at Harvard. She's the head of the department. And she did this lecture at Princeton University at the physics department. And I was there in the room. And I used her math back in 2013 or 14. I want to say it was 13. In 2013. And she was looking at expanding galaxies and their thermodynamics, and then where it would peak out. And they were using like a quantum mechanics type thing and like an averaging. And so then I didn't say anything to anybody, and I took her math in the room at that time, looked at it, put my math to it, and it predicted the turn faster. So to me, that says that I can confirm that my math has been back tested 37 million years. So then I used she used a second galaxy of expansion, what she referred to as new galaxies. They were only 37 million years old. And so they were using Hubble and looking at new galaxies that had been created something like 18 and 37 million years ago. And how did they figure that out? By light years. The distance, the growth, all that stuff. And so the, Planck scale, I guess you could say. And so then I took that math and did it again. So I back tested it first 18 million years, and then in the second one, they were guesstimating between 36 and 37 million years. They were using a fudge of a million. And so I say that using her thermodynamic expansion of a new galaxy, I put my math to it, and my math predicted the end of the thermodynamic expansion faster than her math did, using conventional math. So I hope that answers your question. I say, where's math? It's possible your math stopped working one day. I guess that the markets would have to change drastically for your math to stop working. You know what we've learned over the years, the few people that and traders that use my math, manipulated natural ebb and flow. In other words, a natural. I'm trying to find the right words. Natural. Here's the best way. No insider trading. That's one way of looking at it. No insider trading. Let me show you insider trading. Here, let me show you a chart with insider trading. Let's see, where's it at? There we go, right here. There's a stock a friend of mine follows. And let me just minimize that for a moment. Okay. And let's see if we can make this bigger. There we go. And I'm going to show you what insider trading does to my math. Okay. Now, my friend trades this stock. Here it is right here. Right there. See, you see my arrow? Why are you not seeing my arrow? Not sure why you're not seeing my arrow. I'll use this arrow over here. Okay. All right. So you see right here. Let's see if I'm checking the screen to make sure we're seeing it. Okay, good. All right. Right here, he tells me that he knows insiders and that there's news coming out. Now, he doesn't know how good or bad the news is, but he knows people that work for the company, and they say news is coming out. Okay? Now, he's assuming that the news is going to be good, but he doesn't have that type of information. But he knows news is coming out this is the daily chart right here, okay? Now, I'm in a daily sell here, but I'm in a weekly buy. So, insiders have been in a longer term, week to week, are buying. Okay, so you can see on the weekly. Correct. That's why on insiders, they can. The central banks are the insiders, but they're not as abusive. And I find that there's different characteristics of central banks being more in power of currencies now than before. But they're nowhere's as bad as insiders. Exactly, and we can look at that too. That's another example. Now look at this, just a real quick, and we'll go over to the yen. As you can see here, I'm in a daily sell right there. He's telling me there's news coming out. I'm looking at it weekly, and I say to him, well, it must be a good news because the weekly is lifting, and that's the stronger of the two. And sure enough, 2 days later or 3 days later, you can see this thing spikes. It almost doubles in price. Okay? I'm still in a daily sell. And what do they do over the next week? They bring it right back down to where it started from because it was only insiders pushing it up, but the investors lost confidence in it, and then you can see the weekly goes into a sell, and you can see it drops even more. Okay, you can see it goes into a buy here without the insiders, and it goes up for a couple days, but we're already playing with a daily sell. Then it goes into a sell here, and the sell has been a very nice sell overall. I mean, you had a couple days of buying to give you a chance to sell again, and there's more wins. Last couple days it's been in a buy. It'll start trading in a few hours or a few minutes now. What I'm saying. All right, so let's get rid of that. That's gone. There we are. So now, let's take a look at. Let's get rid of that. And let's go back to the yen. For another example. Right there. And that was last week. The Bank of Japan, there it goes, working now, did that. You can see we were in a buy and a buy and a buy all the way. They slammed it. By the end of the day, it was still lifting up. And this was in a daily sell for 2 days. And then it went back into the buy. And, it's just, just cruising along. But we're in a weekly buy. So you can't take you couldn't take the sell here. You're not getting short off of that because we're in a weekly buy. But if you're long and saying, okay, I'm going to put my stop here or there or something like that, then obviously it's a winner. But in the end result is that even with insider going on, the Bank of Japan itself, the weekly is holding up. So obviously it's not going to have a lot of life to it, Let's see. Now we go to, gold again, like right there. And there's gold. And as we see, gold is trying to rally. And then let's put up the South African Rand. More than likely, it should be starting to top out right there. And it's trying. It's still rising. And when we look at it on J4X, you can see the South African Rand is pretty much, holding up pretty well. Let's see, where's it at? Right there, ZAR. And so it is flattish, but it's trying to turn up. It's trying to, that's the top. It's like some type of top here, because gold is trying, as we showed you just there, gold is trying to rise. So when gold goes up, South African Rand goes down. Oh, they announced it. I'll tell you, that's the one thing Giannis and I like, is that Japan is not chicken. They'll tell you that they're going to do it, and they do it. And it's like mass psychosis of all 100 million of them. They do it. And so Japan, Bank of Japan and the government of Japan are not chicken whatsoever. They'll tell you what they're doing ahead of time. We talked about it here. Bank of Japan announced like 2 or 3 days beforehand, said, we're going to start in, it touches 145, we're jumping in. It touched 145, they jumped in. They're not afraid to hide it. Matter of fact, they actually publish how much they're invested and what they're invested in. So they control almost like, was it the Nifty, what do they call it? What's that second one they have? So you have the DAX, and then you have, not the DAX, I'm sorry, you have the Nikkei, and then you have the, there's another one. They have, I wanted to call it the Zetra, but that's Germany. They have a second one, Topex. They have the Topex. That's what it is. So they have the Topex. The central bank operations has been confirmed by the bank's representatives, who stated, "We have taken decisive action in the exchange markets." It's from the article on that day. Yeah, exactly. And so they have the Topex, and they own the Topex is like the Dow Jones Industrial Averages to the S&P 500. It's the best of the best of like 30 stocks of the S&P 500. And the Topex is like 40 or 50 of the 200 stocks, the best of the 40 or 50 200 stocks. I think it's like the 50. And they own something crazy. They announce it. They own like 75% of all the open market stock. In other words, the public stock, the stock that's traded every day. They own 75% of it. Let's see. What's Giannis says? Giannis says it's from the. Let's see. Oh, there it is. Okay, yeah. 500-point drop in 4 hours. Exactly. Nice. And so Giannis just put a connection there. You can click on that and you'll see it. But the Bank of the Bank of Japan is not afraid whatsoever to tell you what they're going to do, and they'll do it. And they'll, and then you can see on our chart how it had some lasting effect for about a day or two, and then fell over again. So, the Topex, they own the Topex, and they own something. I mean, like 75% of the Topex is owned by the Bank of Japan now. That's the top 50 companies in Japan. They publish it themselves every quarterly, how much they own of the Topex and those companies. So that's why we used to call Japan Japanese Inc. INC, like incorporated, Japan Inc. or Japan Incorporated. You know, the country functions like a corporation. It's kind of neat. Kind of neat. All right, now, let's see what's the next thing we'd look at. Let's jump over to, where were we at? Oh, yes, gold and South African rand. We looked at the yen, and now we're going to look at where we go from the yen. Oh, the Mexican peso. We'll finish off the currencies right here. There we go. And as you can see, the peso got to the 50 percentile. You know, the math bounced. We got it. Let's put it up on J4X. Oh, there we go. Let's put it up over there. I just dropped my lid from my tea. Mexican peso. Right there. And the peso did what we've been looking for because of that weekly buy. We kept on thinking that they were going to bounce off these lows. They didn't even touch the lows and bring it to the 50 percentile, and they did. They hit the 50 percentile and stopped right there. So, and that's really the action we're seeing nowadays. You know, we're seeing that type of action. When we go over to, I guess what we can do now is, I guess we're done the currencies. So let's close those. And we'll go and look at the energies. So we just saw, no, that's gold. So we'll do the gold. So let's see what silver's doing here. There's silver. Silver's trying to lift its head up also at the same time. We'll put it over on J4X. There it is right there. So, you know, it's just kind of bouncing along. This is the December contract, a little discounted to the spot. And you can see it's been in a weekly sell for a bunch of weeks, 8 weeks now, a weekly sell. And a daily sell since here. And then, let's see, what else we got? Then we can take a look at copper, same situation. Copper, you know, in a daily sell since here. Just in a weekly sell for the second week now, that's it. Where are you, copper? There it is. It's been gravitating down. You see it's trying to bottom a little bit right there. And then, what else we got going on? Let's take a quick look at platinum. Right there. Still trying to get their legs in the platinum. They can't get it getting rolling. But we even have a green line right there. We just want to, we got it warmed up, ready to go when it gets into the buy. Because I'll tell you this, I expect to see the silver and the gold get into daily buys, and I expect to see this thing get into weekly buys sooner than later. And when they do, you know, I think that's going to be the buying opportunity of the metals complex. Right now, we're just telling you to stand to the side and be careful because, you know, our signals, you know, like this was a good buy. And this worked out well. Let's widen that. Oh, that's the platinum, so we don't need to see that. But this was a good buy. Once it went into that weekly, gold took off, silver took off. We've seen that a few times. Every time you look at those dates at the end of July, or you know the sell at the end, the middle of or the beginning of June, or the buy at the end of May. You know, you'll see those. You know, they all match up to the metals market of taking off a week later. And then from there, we jump over to the energy sector, and there's, you know, like oil. We saw that lifting up. Let's go take a look at the back month, Jan, and at the same time, we will, you know, it's flirting too now with a daily buy. And let's put, I bet we're looking at 88 or something like that in Brent. Where's it? 80. There's 87 basically. Okay, and Brent's starting to lift up. We're starting to see that action at the same time. Where else is it? So you can see those energies are doing it. And then we see natural gas here in the States. Let's see. And we're going to, you know what we're going to do is we're going to put natural gas up, but I want to put that Spanish one up. That's interesting. It's the only thing we can use to measure for the time being, and that is the Spanish stock. So it's trading in the low 25s. And natural gas in the United States is flirting with, there's the November contract. And you can see right there, it's kind of unchanged and trying to stay in a daily buy. Our weekly is in the second week of the sell. We'll see what that does. But let me just tell you about the polls I saw, did I mention it earlier? I might have did it on the phone with somebody. The leftist polling organizations of Washington Post, ABC News, okay? That's the ones that are owned by Disney. Came out 2 days ago on Monday and said that Republicans are leading Democrats in the House, like I've said all along, by 21%. By 21%. Now this is not a conservative or a Republican poll. This is leftist. Their polls, they can't even hide the polls at this point. I mean, they're trying to. If it says 21%, it could be 35%. We may see, for the first time since 1871, a supermajority of Republicans. We've had 100 years of off and on supermajorities by Democrats. But we may be coming to a point where we finally see a supermajority of Republicans. We've not had that power. I know the media tells you we have power. The Republicans have not had the power that they say we have had. And so this could be a big thing economically. Very positive. No wonder the dollar index is flying up into the sky. All right, just finished my tea there. All right, so that's the energies. Let's take a look at the stock indices. Go on from there. There's the S&P 500, which is up now. Let's see what we can do about that. Oh, something happened there. Okay, let me just turn something on. Oop, I just realized something got turned off. I must have turned something accidentally off. We just need to turn on the live again. Let's see what's there. Okay. And we'll log in. And then we'll have some live stock indices. Let me just push this over to there. There's the S&P 500. You can see it's trying to lift up, but it's not. Yep. Okay. All right. And the answer to that is, oop, wrong place there. That's for sure. Right there. That's where it is. Got to put one of those authentication things in. There we go. And there we go. And so there's the S&Ps. You can see them trading at 374. Dukascopy has them probably right. It's 336.61. So this is probably going to drop down a little bit in a few seconds now that it's loading up. No, they're trading at 373. Okay, so that's the futures contract. That's what it is. And Dukascopy must be following the spot at 366. So that's right. Okay. So you can see here they're showing some strength. Daily is still fighting to get going. Nothing major there. And then at the same time, we can see the Dow Jones Industrial Average right there. It's up a little bit. It's up 146 points at the moment. Let's put that up over on J4X. Yeah, they must be cash we're looking at when we look at the that one on J4X. And so we're you can see it's trading at the futures contract is trading at 29,342. So it's up 145 points. And then the NASDAQ 100 or the Tech 100 right there, doing the same thing. Ooh, okay. So that is the name of that game. And I guess we're done today, traders. So this is Doc from North America. We will catch you all tomorrow, same time, same channel. And happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders.